Bismillahirrahmanirrahim. Assalamu alaikum students. In this video we will discuss the what is accounting. Accounting is the process of analyzing, recording, classifying, summarizing and making financial statements of financial transaction in terms of money. We will discuss all these stages like analyzing, recording, classifying, summarizing and financial statements and in terms of money. What is analyzing? We will analyze either the transaction is accounting transaction or not. If we have some source of transaction like a bill, if there is any amount on that bill, like if we have spent cash, what is the amount of cash? If um, there is some money on that bill, we will record those transactions. We will record these transactions which has some amount. Like if we will say that a transaction is like Ali invested a lot of cash in the business. This is also a transaction, but this is not a accounting transaction because in this transaction money is not involved. If there is money involved in the transaction, then we will record. Otherwise this will not accounting transaction and we cannot record it in the books of accounts. And then after recording, what is recording? In accounting, the process of recording is called journalizing. When we will make journal entry of any transaction, that is called recording. And how we will make the journal entry? Like any person invested 20,000 cash in the business, so the journal entry will be cash will be debit 20, with 20,000 and to capital 20,000, and first will be debit and 2 when there will be 2 that will be credit in the journal entry. And what is classifying? In the process of classifying, we separate every account that is called ledger or account, and there are two ledgers or account. Like first is cash account. We have seen that the upper ledger is cash account, cash ledger. On the left side is debit side and right side will be called credit side. And cash was debit on in the entry in the previous slide, so cash will be debited 20,000 and the credit account was capital, so capital will be written in the particular column. And the second ledger is of capital ledger, capital account, and capital was credit, so we have recorded on the credit side of the ledger. And why it was credit? Because of cash, so cash will be written in the particular column. And then summarizing. In the process of summarizing, we take debit and credit balances of every account or ledger in the table form. This table is called trial balance. In the trial balance, we summarize every ledger, like we make the ledger and the closing balance of every ledger. We write these balances in the table form, that is trial balance. So this process is called summarizing. And then this is financial statements. There are three financial statements. Income statement. In this statement we check either we are earning something or not. Means we check in this statement profit or loss. In other words, we check the profit or loss in it. Statement of financial position. We check the financial strength of the company. The SOFP, statement of financial position, is assets less liabilities is equal to capital. And statement of changes in equity. A statement reconcile the opening and closing amounts of equity. And what are the objectives of accounting? Accounting has many objectives, including letting people and organization know. By accounting we know about these objectives. Primary objectives of accounting is to provide information for decision making. And first and utmost objective of the accounting is to provide information to the managers for decision making, and if they are making a profit or a loss. And other objectives are what their business is worth, what is the worth of the business, what a transaction was worth to them, एक ट्रांजैक्शन की वर्थ उनके लिए क्या हो सकती है. In accounting we know about every transaction, how much cash they have. In cash book there is a book that is called cash book. We can use for knowing how much cash the organization have, because in that book every time cash is updated, how wealthy they are. From the statement of financial position we can check from the assets, we can check that how much wealthy the organization is, how much they are owed, what are the how much the liabilities of the organization, how much they owe to someone else, what are the account receivables, means what are the assets, what are the account receivables of the, how much account receivable of the business. Enough information so that they can keep financial check on the things they do. They can they can keep a financial check on the things they do. Like on the account receivables, on the account payables, we can make a check that so that they cannot cross the limit. Like if we want to do check on the account receivable that we will not 20,000 pounds account receivables, so we can make a check with computerized accounting system that we will not credit sales up to 20,000. So when we have 20,000 pounds credit sales, then credit sales will be closed. And what is bookkeeping? The part of accounting that is concerned with the recording data is often known as bookkeeping. It means the journalizing, in which we record the entries, and classifying, in which we make the ledgers and accounts or accounts. This phase is called the bookkeeping in the accounting. And who are the users of accounting information? The accounting information, these persons who need the accounting information: managers for decision making, owners for checking whether they are earning something or not, and check how much they are wealthy. Prospective buyers, who are the buyers of the product of the business. The bank, who will the bank will who can give loan to the business, loan to the organizations. Tax inspectors, who will levy the taxes to the business or organization. Are prospective partners, like partners of the business who are not active partners. Investors, investors who will invest in the organization or business, like shareholders. Shareholders are the investors of the business, investors of the market, like they take shares and they invest in the organizations.